Last month, I made 566k trading gold. In this video, I'm gonna show you exactly how I trade gold, how I find my entries, how I decide where to take profit, and I'll break down the 2 live trades that made me that profit. Now, this is not theory. These trades were documented live on my second channel, Brad Trades. And later in this video, I will show you exactly what I saw before entering, where I place my stop loss and take profit, and why. Now, for those of you who are new here, my name is Brad Gold. I've been trading for nearly 7 years, and I document every single trade on my second channel, Brad Trades. I'm the founder of 1% Club, a trading mentorship program that has helped hundreds of students become funded traders. And I'm also the founder of EdgeFlo, a discipline-first trading platform that helps you plan, execute, journal, and review your trades with proper guardrails and performance tracking. So, I don't want your money. I want you to become a better trader. With that being said, let's get right into it. Now, before I show you the strategy, you need to understand one thing. Gold is not like every other market. Gold moves super duper fast, which means that it can give you a very clean move very fast, but it can also reverse on you just as fast if you are way too late or if you get too greedy. That's why a lot of traders struggle with gold. They treat it just like a normal forex pair, and then they enter way too late, or they hold the trade for way too long, or they use stop losses that are way too tight, or they try to catch the entire move. But gold doesn't reward that. Gold respects liquidity very well. It loves to sweep highs, sweep lows, grab liquidity, and then move aggressively in the opposite direction. So instead of chasing price, you need to understand where liquidity is sitting and wait for price to come to your level. The biggest mistake beginners make with trading gold is that they think they need to catch the entire move. You don't. You don't need to catch this entire 200 pip move in order to make money on gold. You just need to catch the cleanest part of the move. That's the mindset shift. The goal is not to predict the entire day. The goal is to find the highest probability section of the entire move, and then get in, take your profit, and get out. So I want you guys to remember this when you are trading gold. Get in fast, get out faster. That's my philosophy when it comes to scalping gold. Now, let me walk you through my entire gold trading strategy, which comprises of 5 simple steps. This is the exact same framework that I use whenever I'm looking for quick, high probability move on gold. And remember, because we are scalping today, we are not trying to predict the entire day. We are not trying to catch the entire move. We are just trying to catch the cleanest part of the move. So step 1 is identify the trend direction. Specifically the 15-minute and the 1-hour trend direction. So you want both of these time frames to be aligned before you even look for a trade. So if the 1-hour time frame is bullish, but the 15-minute time frame is bearish, now we got a misalignment in the higher time frame and the lower time frame, which will give you low probability setups, right? So as much as possible, you want both of these time frames to be aligned. The 1-hour bullish, 15-minute also gotta be bullish. The 1-hour bearish, 15-minute also gotta be bearish. So yeah, like if you're a beginner, you want to just make sure that both time frames are aligned as much as possible. So in this particular example, you can see that price is creating your lower highs, lower lows, lower highs, lower lows. And then what happened was that there was so much bullish momentum, so much buy orders in the market that later price went up there and take out the last lower high, giving us a market shift, right? So at this point of time, we know that the structure has officially shifted bullish on the 1-hour time frame. And once you got this market shift right here, this is where you can identify the higher highs and higher lows as your new bullish break of structure. These tell you that the buyers are in control of price. Demand is overpowering supply right now. So that is where you can mark up another break of structure right here, right? So market shift, break of structure, and this is where we can clearly see price is creating your higher highs and higher lows. And the moment you map out your most recent break of structure, this is where you can map out your 1-hour swing low, which is this low right here, and then this will be the 1-hour swing high. And this becomes the range that we are trading within right now. This is the 1-hour strong low, and this is the 1-hour weak low. So we are expecting price to, continue creating this higher highs and higher lows dynamic, and just continue creating bullish break of structure to the upside. So that that's the 1 hour time frame, right? The 1 hour time frame tells us that right now price is bullish. So step 2 is to mark up liquidity and point of interest. Once I know the direction I want to trade, the next step is to identify the location in which I am scanning for trading opportunities. And in order for you to do that, you need to mark up your liquidity and point of interest. Now, I've done a lot of videos on liquidity, so I'm not going to cover liquidity too in-depth in here. But at a high level, just understand that liquidity is essentially where traders are placing their stop losses and stop orders. So it's essentially the fuel the market needs in order for it to move in a particular direction. So in this particular example, what I'll do is that I will just map out the demand zones first, then I will try to search for available liquidity, right? So the reason why we want to trade at demand zones is because price is bullish right now. So we want to look for buys, we want to look for long positions at demand zones, as simple as that, right? So you always start from the extreme, right? So this is the 1 hour swing low, and then there's a demand zone right here, and then later on price went up, pull back, and then goes up again, creating another demand zone right here, right? So just at a high level on the 1 hour time frame, you can see that there's 2 demand zones, which means that we are not going to be doing anything until price comes down to either one of our 2 demand zones that we have marked up right here. Just by doing this alone, you will filter out a lot of bad trades. You won't be looking to get in here or here. No, because price is not at your ideal location yet. So you have to be very patient and wait for price to get there. Like I said, this point of interest are the areas where I want price to react from. And this could be a supply zone or a demand zone or a fair value gap or an order block or any clean area where price previously showed strong direction, right? Because that gives us an indicator that that is where smart money have got in the past, and they are most likely going to enter at the same price again. Now, once again, we don't enter when price is in the middle of nowhere. You want to wait for price to come into a clear area where liquidity has been taken, risk is defined, and the trade actually makes sense. And also another thing you want to do is to mark up your available liquidity, right? So this is where I want to see price sweep the liquidity below swing lows. So this is where you can see that, hey, all of these swing lows, all of these internal lows that's being formed right here, all of these are liquidity, right? So what happens is that price went up, pull back, goes up, right? So this itself is liquidity. But in this particular example, price has already swept the liquidity below this low when price came down and created this long low wick right here, right? So that one has already been swept. And then let's try to search for more available liquidity. Well, price went up, pull back, and then goes up again, right? So this is clear as day, another liquidity point. And then there's also another liquidity below this wick right here, right? So these are like the 2 most obvious liquidity that price has to take before price can continue bullish. So once again, we are not doing anything until price come down to take one of these 2 liquidity right here. So on the 15-minute time frame, you can also see that, hey, this was the demand zone that we have mapped out, and you can also draw another 15-minute demand zone right here because this is where price went up, pull back, and then goes up even further. So if you are scalping, like I said, you want to wait for price to get down to your point of interest, which brings us to the 3rd step. And that is to be very patient and wait for price to reach a 15-minute point of interest, right? So once again, there's one demand zone right here, another demand zone right here, and there's another demand zone right here. We don't know exactly which one price will react from, but what we do know is that price is going to react from one of them and then eventually make the move to the upside. And what we want to do is to just do nothing until price get down to the first demand zone. If price gets down to the first demand zone right here, we look for our entry confirmation, we look for our entry model, and if it presents itself, we look to get in. If it doesn't, then we wait for price to get down to the next point of interest, and we repeat the same process of searching for our entry confirmation, searching for our entry trigger. If it doesn't, like I said, we pass on the trade and wait for price to come down to this next point of interest. You can see this framework is very methodical, very mechanical, and is repeatable, right? Whatever that is simple is scalable, right? So that's how I frame this. So yeah, step 3, do nothing, wait for price to come down to the point of interest. So let's see what price does. Okay, price continue to go up there, creating another bullish break of structure to the upside. But then you can see price is starting to approach this point of interest, right? And that's where I'm looking to get involved very, very soon. Okay, price mitigate the point of interest. So step 3 done, right? Mitigated our 15-minute demand zone. But is that a liquidity sweep, right? Is that a liquidity sweep? Because remember, liquidity is essentially the fuel that smart money need in order to move price up significantly or go down significantly, right? So we need to get a liquidity sweep. And in this particular example, price have not swept liquidity even though it mitigated the point of interest. Which brings us to step 4, and that is to wait for the entry model. The moment price reaches your point of interest, you cannot enter blindly right here because you haven't gotten the confirmation that price is indeed going up. So if you enter right here, it's way too early, it's too premature, and what tends to happen is that we can have a false breakout right here for price to continue crashing down, and then you just get stopped out like you always do. So you want to be very patient, you don't enter blindly, you wait for the entry model. So the first thing I want to see is price sweep some form of liquidity. Because when price takes out a previous high or low and grabs liquidity, this indicates that smart money has manipulated price to trap all the retail traders, and now they got fuel they need to actually cause price to move up. So that's always going to be the first thing. So in this case, if you look at this right here, there's liquidity sitting beside this low right here. So I want to wait for that to be swept before I can even consider getting into the trade itself. So in this case, once again, price is right here. It's trying to side me into the trade. It's trying to induce and entice me into, entering for a long position right now. But I am not interested, right? Because we haven't gotten the liquidity sweep yet. We ain't dumb retail traders, all right? So we wait and wait and wait and wait and wait. Still waiting, still doing nothing. Boom. The moment price comes down and sweep the liquidity below this low, this is where you can look to get in, right? So somewhere around here, the minute price came down, swept this low, you can easily get in for a long position right here if you are super duper aggressive, right? So if you're aggressive, you can get in for a long right here and then try to target. Where do you target, right? Which brings us to the next step, is to make sure that you target the next swing high, swing low, or point of interest. Now, for targets, I like to keep it simple, right? Because this is scalping. I'm not trying to catch some massive move like 1:10R or none of that BS. I'm just going to target the nearest logical liquidity. And that usually means the next swing high if you are looking for long. And then if you're looking for short, it means the next swing low. Or the next supply or demand zone or order block or fair value gap, like the next point of interest, right? So in this case, since I'm looking for long at this liquidity sweep, I'm going to be targeting the next supply zone or the next obvious swing high, right? So in this case, you can see there's two places where you can target. Right here, there's a swing high. This is the ultimate swing high, right? The 1 hour swing high. Or you can target the 15-minute internal high, which is this one right here, right? So these are two places where I can target. Now for me, scalping wise, I like to, just really manage my expectation, be extremely conservative, and that is why I will most likely target the nearest 15-minute high, which is this one right here. And then when it comes to my stop loss placement, I'm just going to be placing my stop loss below the candlestick that I entered the trade from, right? So if I'm entering this trade right here, I'm placing my stop loss below the low, right? Because why? Why below the low? Because this is the low that swept liquidity. So it becomes like a protected low, right? So this means that there's a lower chance for price to come down there to sweep this low before going up even further, right? So that's where I will place my stop loss. So this is how you can go about trading if you are aggressive. Like this is like a simple 1-3R trade. You just enter right after the point of interest mitigation and liquidity sweep, and you can see price just happily went up there and smashed your TP, right? So this is if you are trading aggressively. Now, if you want to look for extra confirmation, you're thinking, I don't know about entering right here, Brad, because it's a little bit risky, it's a little bit dangerous, and you want to play it safe. Let me introduce you to another entry confirmation, and that is the market shift, right? So in this case, if you want to really just get more confluence, what you can do is wait for price to take out the last lower high, right? So in this case, price came down, pull back, came down, pull back, and then goes down even further. So this is the last internal bearish break of structure, which means this is the last internal high, right? So if price is going to take out this last 15-minute high, this means that we can officially get a market shift, which confirms to us that the internal structure is indeed shifting bullish. And then right now, you got all the stars in the entire universe for you to look for longs, right? So this is the second way to enter for this trade. If you're not okay with the first way, which is too aggressive, you get the liquidity sweep, get a point of interest mitigation, you enter right here and then place your stop loss below the protected low, place your take profit right here. If that's too risky for you and you want to play it safe, what you can do is to wait for the market shift to be formed and then wait for price to pull back to the zone that created this market shift. Right, so in this case, you can map this thing right here as your 50-minute demand zone that led to the market shift, and you can look for an entry only when price mitigated this zone. Right, so in this case, if you map it out via like the pivot candle, right, you map out a demand zone via the pivot candle, it didn't mitigate it. But if you draw the entire demand zone as like this entire range right here, it did mitigate it. And then this is where you can look for longs and you can trade it to the next swing high, which is this one right here. Place your stop loss once again below the candle that you enter the trade from. And yeah, happy days, right? So I wanted to show you guys like the two types of ways where you can actually trade gold, right? The aggressive way where you enter just right after the liquidity sweep. But once again, the downside to that is that you're going to be prone to a lot more false breakouts, right? There's going to be times where, you know, price comes down, sweep this liquidity and just continue going down. If that's the case, you're just going to get stopped out, right? I'm just telling you the truth right there. That's the downside of using the aggressive entry model. But if you use the aggressive entry model, there's a lower chance that you are going to miss out on the trade itself, right? Because price does not, you know, pull back after the market shift all the time. Sometimes price will just sweep the liquidity and then just stop going up like crazy. So if you're waiting for the conservative version of the entry model, you will have missed out on this trade, right? So it's all about your risk tolerance, right? You can test both out and see which one works best for you and then stick to that one. Now, before we move on to the next part of the video, I got a very important announcement to make, and that is the fact that you can finally trade multiple assets on EdgeFlo, my trading super app, right? So right now, if you're trading gold, forex, indices, crypto, or commodities, you can finally do so on EdgeFlo. Now, if you're a full-time trader, you probably don't just need a strategy. You need discipline. You need proper risk management. You need journaling. You need a system that keeps you accountable. And that is what EdgeFlo does for you. It is the world's first trading super app which allows you to do your pre-market routine on there. You can even trade on there. You can journal on there and do your whole post-market routine on there. So it's like everything you need as a professional trader is in one place. It's in one system. And on top of that, you can now connect Trade Locker directly to EdgeFlo as well. So whether you're trading gold or any other market, you can use EdgeFlo to plan your trade, calculate your risk, execute with guardrails, journal the trade, and then review your trading performance in one place. Now, I know EdgeFlo sounds super exciting, but hold your horses. I'm going to show you how I use EdgeFlo later to trade gold to maximize my profitability later on in this video. But for now, let's get back to the video and let's go through the 2 live trades that I've taken on gold that made me a ridiculous amount of money. So at the start of this video, I told you guys that I made 566k live trading gold. And the best part was that I did it in 2 big boy trades, right? Just 2 trades. And once again, every single thing was documented live on Brad Trades, my second YouTube channel. You can see my entry, you can see my exit, and you can see all the stupid mistakes that I committed in between. But anyways, I wanted to show you guys my thought process for these 2 trades, how I pretty much applied this strategy that I show you on these 2 trades alone. So this is my trading journal, and you can see this was the first trade, June 18, made 292k. The trade took about 1 hour, 20 minutes. Right, which is quite short, right? Imagine making 300k in freaking 1 hour 30 minutes. Never have I imagined that I could ever get to this stage right here in my trading career. Now, anyways, as you guys can see, this is the chart screenshot itself. This was what price looks like on the higher time frame, on the 1 hour time frame. You can see we got a market shift. Price is obviously heavily bearish, right? Clearly. And then on the medium time frame, I was also bearish, right? Price was also bearish. So 15-minute, 1 hour time frame, both bearish, perfect alignment, right? This is where I know that I should be looking for shorts. And then all I did was to wait for price to come back up to the supply zone, right? Wait for price to sweep liquidity on my lower time frame right here. And this is where I got my confirmation to look for short right here, right? So I like to play it safe a little bit. So I don't usually enter right after the liquidity sweep. You can see in this case, this was the liquidity sweep. I like to wait for an additional bearish candlestick to form to tell me that there is indeed selling momentum, selling pressure in the market, and then that is where I made my entry right there. Yeah, so entered right there, stop loss, like I said, above the candle that I entered on, or rather above the protected high, right? Because this is the high that swept liquidity, enter right there and just take profit at the next 15-minute demand zone, right? At the next 15-minute swing low, right? So you can see this is the application of this entire strategy that I've been talking about for like the past 30 minutes. It's really just as simple as that, right? Like when you have such a simple framework, you can repeat it. And when you can repeat it, you can scale it. So overall, I'll rate this trade like a good old 7 out of 10, right? It's not the best trade that I've taken in my entire career. I've got a lot better entries, right? Sniper entries and all that stuff, and made a lot more money on other trades. But I would say this is a pretty good implementation of the trade plan that I shared with you guys like in this video itself. So I'll give it like a 7 out of 10. Now, the next trade, I'm going to give it like a freaking 5 out of 10, right? And hear me out, all right? So for this trade, made about 274K, right? And this took about 44 minutes, right? So it was under an hour. You can see this is what price was doing on the higher time frame. Obviously bearish. Medium time frame, right? Price was shifting bearish, right? Price was actually bullish right now, right? So in this case, you can see now there's a misalignment. The medium time frame is bullish, higher time frame is bearish. So is this really a high probability trade? Not really. But in this case, you can see on the lower time frame, the boy still took that trade itself because, yeah, why not, right? Why not? Hashtag why not? And I almost lose the trade, right? If you guys watch the live trade breakdown, you will see that I almost lose the trade itself. Because when I entered for a sell right here, I entered because price have swept this high right here. And then price went down. You know, I was up a little bit, you know, almost hit my TP right there. But then price started to move against me, right? Started coming up here. And then this is where I decided to like just remove my stop loss, you know, just be a little bit more discretionary because my gut feeling says so, right? Like that's the truth. My gut feeling says so. And to me, since I've been trading for 7 years, I've learned to trust my gut feeling in the past 1 or 2 years or so. Because I believe that my gut feeling is simply my subconscious pattern recognition skill, right? So when my gut feeling is like, yo bro, you gotta remove your stop loss right here, because we all know what's gonna happen next, which is the fact that price is gonna sweep this high and then go down to your TP, right? So at this point of time, I had to evaluate, am I removing my stop loss because of fear, or am I removing my stop loss because that's what price is doing? Right, so that is where I was like, let me just be as objective as humanly possible, right? Let me remove my stop loss because I know price is gonna sweep the liquidity above this high right here. And if price still want to continue going up, I will just close the trade manually and take a big fat L, right? But luckily, price did play out in the exact manner I envisioned it to play out. Price went up there, swept the liquidity above this high, and then continue crashing down. This is where I put my stop loss back, now above this protected high, and I managed to take profit right here. Yeah, that's why I'll rate this trade like a 5 out of 10 because it's not the best entry, it's not the best implementation of like this strategy right here, and it requires a little bit of discretion. So if you're in your first year of trading, I would highly discourage you from moving your stop loss, right? Just stick to your stop loss, be as mechanical as humanly possible. But because I've been trading for so long, right, I've learned to like just develop this gut feeling, which is, like I said, really just my subconscious pattern recognition skill. It's simply just my mind recognizing that, hey, Brad, you got stopped out at this place multiple times in the past. And whenever you do, price always end up going in your way, right? It's just a classic liquidity sweep. It's just a classic market manipulation, right? So let's be smart this time around and let's do the right thing. Okay, so yeah, that's why I did this. Now, before I end this video, I want to show you what I call the trading cheat codes. Because here's the truth. A strategy just like this can help you make money. But discipline is what helps you keep the money that you have made. And this is where so many traders fail. Most traders don't lose because they don't know when to enter. They lose because they're over risk. They revenge trade. They enter into a trade without a trading plan. They move their stop loss. They don't journal the trade and they have no idea what they are actually doing wrong. That is why I built EdgeFlo. EdgeFlo is the discipline-first trading platform that I personally use to plan, execute, journal, and review my trades. So quite simply put, EdgeFlo is a system that has discipline built into it. So you don't have to rely on your own discipline. You don't have to rely on your willpower. You will just do the right things every single day that will get you consistent results just by using this awesome app every single day. So with that being said, let me show you how I use it to become wildly profitable. So first of all, before I enter into any trade, whether that's on a forex pair or gold or US30 or NAS 100, I want to create a trading plan. So this is where I can come onto Edge and I can choose from any of the templates that we have given you in here, or you can just create your own trading plan just like this. Type in your charting process, your entry criteria, your trade management rules, your exit criteria. So this way you are always following a trading plan. And by the way, it also recorded like the statistics of the plan, right? So all the trades that you have taken according to this plan, you can also see how they are performing. And then before you start trading, you need to analyze your charts. And guess what? You can do so with a trade plan right beside you, right? You can go through your charting process, do your chart markups in here, and look for entry criteria, and even look at the entry models that you have mapped out right here, so on and so forth. Now, this way, I already know what I'm trading, why I'm taking the trade, where my entry is, where my stop loss is, where my take profit is, and how much am I risking. This removes emotion and guesswork because I'm not figuring everything out while price is moving. Now, once you're ready to enter for a trade, let's say on EURUSD, all you gotta do is to place your stop loss in here, right? So let's play 1.143. And what EdgeFlo does is that it automatically calculates a lot size based on your risk per trade. So this way you can just get in and out fast. Now, once again, this automatic lot size calculator is available on everything, right? So we all know how troublesome it is to try to find the lot size for gold or US30, but in EdgeFlo is built into the system and it can do it in seconds. Now, another cool thing that EdgeFlo does is that it gives me guardrails. This means that I can set rules like my max daily loss, my max daily profit, my max risk per trade, my max trades per day, and any other limits that stop me from doing stupid things when I'm emotional. This way, when I hit those limits right here, EdgeFlo literally stopped me from trading and just prevent me from continuing making stupid mistakes. And once I'm done trading, every single trade I take on this platform is automatically imported into my trading journal. So this is where I can see all my trading stats and I can just take the time and space to introspect and review on my trading performance itself. And last but not least, EdgeFlo also helps me to track my performance. I can see which setups are working, which markets I trade the best, what time of the day I perform the best, how often I follow my trading plan, and where I'm losing money. This is where trading becomes a lot less emotional and more like a business. So remember this, the strategy helps you find the trade, but discipline helps you keep the profits. It's one thing to make money, it's another thing to keep the money that you have made. And EdgeFlo allows you to do both. That's the real cheat code. Now, if you want to learn more about how I actually read the markets, identify liquidity, understand market structure, find high probability setups, you want to know about my entire trading strategy, feel free to check out my free Market Mechanics Mentorship series right here. It's 33 days where I literally mentor you for free, right? Just check out this playlist right here. Just click here. And if you want to trade gold, indices, crypto, forex, commodities with proper risk management, with discipline, planning your trade, journaling, guardrails, discipline tracking, all that good stuff, check out EdgeFlo as well. Link in the description. And as always, remember, you're just one trade away.